Welcome to The Swing, the official newsletter of the Forex Trade Room, Volume 4, January 26, 2024. The dollar index has seen a slight drop to 103.3, reacting to the latest U.S. economic data. The core PCE inflation in the U.S. has slowed unexpectedly, while personal spending has outpaced predictions, pointing towards a soft landing scenario for the economy. Additionally, the U.S. economy displayed resilience, growing more than expected in the fourth quarter. As the Federal Reserve prepares for its upcoming meeting, all eyes are on potential rate decisions and insights from Fed Chair Jerome Powell, especially regarding the beginning of an easing cycle. The Forex market responded with a significant sell-off in the euro, pound, and Australian dollar against the dollar. The Australian dollar is holding steady at around 66 cents, feeling the heat from a robust US dollar. Strong economic figures from the U.S. are reducing the likelihood of the Federal Reserve cutting interest rates soon. Despite China's efforts to support its capital markets and the People's Bank of China's unexpected reduction in banks' reserve ratios, the Aussie dollar's response was muted. In Australia, there's a mix of economic signals. The private sector is seeing growth, led by manufacturing, but services are contracting for the fourth month in a row. Additionally, there's political movement as Prime Minister Albanese looks to re-evaluate tax cuts for higher earners. The Canadian dollar has seen a rebound, crossing the 135 per USD threshold, aided by a surge in oil prices driven by strong U.S. economic data and stimulus measures in China. The energy market is also responding to supply concerns, partly due to tensions in the Red Sea. Despite these positives, the Canadian dollar's recovery is challenged by the strength of the U.S. dollar. Domestically, the Bank of Canada signals a cautious approach to any future rate cuts, as inflation risks loom with a noticeable increase in average weekly earnings. The economic landscape remains complex with intersecting global and local factors. The Japanese yen has seen a notable appreciation, moving past the 148 per dollar mark. This movement comes in the wake of Bank of Japan Governor Kazuo Ueda's comments, which hinted at the growing possibility of a shift in Japan's monetary policy, particularly if the current trend of inflation aligning with wage growth continues. Despite these hints, the Bank of Japan has kept its monetary policy unchanged for now. Interestingly, Tokyo's core inflation rate showed a slower pace than expected, dipping below the central bank's target. These developments have stirred the financial markets, as investors speculate on the future direction of Japan's monetary policy. The New Zealand dollar has remained stable at around 61 cents following the release of the country's Q4 inflation report, which showed a decrease in the inflation rate. The CPI rose by just 0.5% this quarter, compared to a 1.8% gain in the previous quarter, aligning with market expectations. Annually, the inflation rate has slowed down to its lowest point since mid-2021. Investors are now looking forward to a speech by the RBNZ's chief economist for future policy direction. Meanwhile, the Kiwi dollar continues to be influenced by a robust US dollar and shifting expectations around the Federal Reserve's interest rate cuts. The Swiss franc has weakened to a one-month low against the USD, now at 0.87, influenced by a stronger US dollar and revised expectations of the Federal Reserve's monetary policy. While the Fed's likelihood of imminent rate cuts decreases, the Swiss National Bank is expected to maintain a hawkish approach. Swiss inflation has seen a slight rise, yet remains within the central bank's target. Thomas Jordan, the SNB president, mentioned that the franc's strength has been crucial in managing inflation, noting a significant decrease in foreign exchange reserves. This shift in global monetary policies and local economic indicators are key factors affecting the Swiss franc's current position. The British pound is gaining momentum, now nearing $1.28, bolstered by positive PMI data indicating robust private and service sector growth. This development might influence the Bank of England to delay reducing borrowing costs. Despite the economic promise, the UK faces challenges, including a steep decline in retail sales and an unexpected rise in inflation. The forthcoming budget might offer tax relief, creating a cautious yet optimistic economic outlook. The Bank of England is expected to maintain a 15-year high interest rate at its upcoming meeting, with potential rate cuts anticipated later in 2023, possibly trailing behind other major economies. The euro has weakened, approaching $1.08, influenced by a strengthening dollar and cautious remarks from ECB President Lagarde. The ECB has held interest rates steady, with Lagarde considering it too early to talk about rate cuts, and warning of downside risks to the Eurozone's economic growth. In Germany, consumer and business confidence have dipped significantly, fueled by ongoing crises and high inflation. This overall sentiment reflects a cautious approach in the Eurozone, contrasting with stronger economic indicators from the US. The Mexican peso is making a comeback, moving closer to 17.2 against the US dollar. This recovery follows recent data showing Mexican inflation unexpectedly rising to 4.9% in January, hinting at possible challenges for Banxico's future monetary policy. Meanwhile, Mexico's economic activity has shown signs of strain under tight monetary conditions. In contrast, the US dollar has seen reduced support as expectations of immediate Fed rate cuts in 2024 have waned, partly due to better-than-expected S&P Global Manufacturing and Services PMIs. WTI crude oil futures climbed to $78 per barrel, a level not seen in almost 2 months, driven by a mix of economic growth in the US, stimulus expectations from China, and escalating tensions in the Middle East. The US reported a substantial decrease in crude inventories, exceeding market forecasts, while the American economy showed faster growth than anticipated. Meanwhile, China's commitment to economic stabilization and a reduction in banks' reserve ratios are seen as positive signs for oil demand. Adding to the oil market's concerns, increased military actions in Yemen by the US and UK have amplified supply risks from the critical oil-producing region. Gold prices are holding steady at around $2,020 per ounce as investors evaluate recent US economic data to predict the Federal Reserve's interest rate moves. The PCE index, closely watched by the Fed, showed a 2.6% year-on-year rise, aligning with forecasts, while core PCE prices rose by 2.9%, indicating a slight cooling in inflation. Additionally, the US economy demonstrated strength, growing by 3.3% in the last quarter despite high interest rates. Market players are now focusing on a possible rate cut by the Fed, expected as soon as May, with further clarity anticipated from Fed Chair Jerome Powell's upcoming remarks. In the US stock market, there was a mixed close on Friday. The S&P 500 and NASDAQ 100 dipped, while the Dow Jones edged up by 60 points. Economic data revealed a more significant than expected slowdown in annual core PCE inflation, dipping below 3%. On the corporate front, American Express saw a significant 7.1% rise after projecting an upbeat revenue outlook for 2024. Capital One Financial also saw gains after a strong fourth-quarter performance. In contrast, Intel's shares took a hit, dropping 11.9% following a less-than-stellar future guidance, despite beating estimates. Visa and Spirit Airlines also faced downturns due to cautious future projections. Overall, the week concluded with modest gains for major indexes, with the S&P 500 up 0.5%, the Dow slightly up by 0.1%, and the NASDAQ 100 barely moving. Next week will be crucial for financial markets with key events lined up. The U.S. Federal Reserve's interest rate decision and the release of non-farm payrolls, wage metrics, and unemployment rates are high on the agenda. Economic indicators such as JOLTS job openings, ISM PMIs, consumer sentiment, and factory orders will also be closely monitored. In the corporate world, major players like Microsoft, Apple, Amazon, and others are set to release their earnings reports. Globally, the Bank of England's monetary policy decision and Q4 GDP figures from Europe and Mexico are on the radar. Additionally, inflation data across various countries and manufacturing PMIs and jobless rates from nations like China, South Korea, and Brazil will provide further insights into the global economic climate. Remember, people don't plan to fail, they fail to plan. Good luck this week!